Welcome to Illuminati Silver. We tell the truth about silver. Today is Friday, the 25th of February, 2022. And this week we produced our gold price forecast for this year. And in case you missed it, we've placed a link below. Now today we're asking the question, what will it take to get gold above $2,000? Yes, indeed, after Russia invaded the Ukraine yesterday, we saw gold spike, and considerably, and yet it still did not manage to hit that $2,000 mark. What will it take for that to happen? Well, let's take a look. Yes, indeed, it'll be no surprise to hear that for 2022, we've seen some pumpers predict $5,000 gold, and some even stating under certain circumstances it could go to 15 or even 20,000. Well, theoretically it could, but then the value of the US dollar will have had to drop so significantly. A loaf of bread would cost between $20 to $25 minimum for that to happen. Now, as we covered in our forecast video, in 2021, gold prices rose to as high as $1,957 in early January and dipped as low as $1,683 and then closed the year at $1,806, down 4% for that year. Now, during that time, we had the COVID and Omicron variant pandemic, rapidly rising inflation and interest rates held to virtually zero, and enormous amounts of stimulus being pumped into the economy, including massive amounts of central bank quantitative easing. In spite of the price decline, we had growth in the gold jewelry sector. Bar and coin demand exceeded previous annual levels in both the US and Germany, as investors focused on those rising inflationary pressures and low negative real rates. To top it all, we also had total gold supply easing, marginally down 1% at 4,666 tons, its lowest level since 2017. Although admittedly mine production recovered 2% over the year, but that growth was counteracted by a sharp 11% fall in recycling, and yet gold still could not reach $2,000. Well, what happened this past week then to the price of gold, because we saw it spike yesterday? Let's look. Well, as you can see from this chart, gold began the week at $1,897. It initially opened then and rose to roughly 1908, dipped back on Monday, then continued to rise later on Monday and into Tuesday, only to fall back after Tuesday sort of morning was out of the way, and we had a gradual toing and froing. It then dipped on Wednesday to not quite its lowest level for the week, but close at 1891. And then, of course, we had the invasion occurring. And we can see that just prior to the invasion, gold started to rise above 1900. And then on Thursday, as the invasion occurred, we can see gold spike to its highest level for the week at $1,974. But no sooner had it reached that level, it started to decline, because I suspect that people were fearful that the West could get involved militarily. That hasn't happened. Sanctions have been issued and there's been a lot of saber rattling. And we could see gold actually at one point dip to its lowest level of the week at 1881. And then recovering again to its current level of 1910. So, in spite of an invasion by Russia of the Ukraine, gold still could not hit that $2,000 mark. Why? Well, to answer that question, it's simple. In view of traders' expectations for gold and precious metal prices in general, they are very well aware of bond buying or QE tapering and the prospect of rising interest rates in the months ahead. The UK already raised rates twice this year with another rise expected in March. The Fed is also expected to raise rates in March too, and many pundits are predicting as many as 5 rate rises this year and potentially another 4 more next year. As we produce this video, the dollar index has risen to 97.2, and if there are rate rises, it's still going to hold up very strongly, which acts as an obvious headwind for gold prices. Ah, I hear you say, it's real rates that count, the difference between interest rates and inflation, and that gap is going to take some time to correct, if it corrects at all. And there is some merit in that argument. But speaking to 2 analysts this week, we've been told that they are actually expecting inflation to fall after the recent oil price rise has been factored in, taken into account and declared. So in other words, we might have a higher rate on the next reporting, but it should then come down. We also may have to accept the fact that to some extent this inflation versus real rate scenario has been baked in, or at least partially baked in, to the current price. Now in our forecast, our gold price forecast, we expressed a number of issues that will affect the gold price this year. These include the value of the US dollar, envisaged mine supply versus prospective physical demand, the existing price of gold and where it stands in a traditional calendar cycle, how the alternative investment vehicles are going to fare and are likely to fare, and by those particularly equities, cryptos and bonds, the prospect of rising interest rates to help combat inflation. Is it going to be 4 or 5/4% increases, or will we see 0.5% increases? Time will tell. And of course potential black swans, not least being the Russian invasion of Ukraine, which is now not a black swan because it's happened, but also how China may assess this against their designs on Taiwan. You see, these past 3 years or so, we've had the perfect scenario for gold prices to peak. We've had COVID-19, shutdowns of industry, worsening economic situation with rising inflation, and equity markets having long been awaiting a major fall. However, to counter this, we've seen trillions of dollars of furlough monies being pumped in by world governments, excessive levels of QE given by central banks, and virtually zero interest rates leading to free money for speculation and investment. The result has been rising property prices, a cryptocurrency market cap rising to in excess of $2 trillion and at one stage heading for $3 trillion, much larger than the silver market in its entirety, and of course equities literally going through the roof. So much so that in these past 3 years, although gold is up $579 an ounce, on a 10-year basis, it's up only $129. Hardly a performance to whet the appetite of investors, when equity markets over the past 10 years have seen a 9.2% average annual rise, and the S&P 500 a 13.6% average annual rise. The crypto market has outperformed equities many hundreds, if not thousands of percent. But we have to admit it's a fledgling market, so it started from a very low base. So what is it going to take to see gold hit that $2,000 level and beyond? Well, a number of things have to occur, either unilaterally, but to some great extent, or a more mild mixture of them all. One, the most perhaps imminent, the Ukraine crisis leading to actual Western physical intervention, that is, troops on the ground. Not that likely, but who knows? 2, confidence in the US dollar collapses. Again, unlikely because, as we've seen, it's certainly regarded as the best of a bad bunch of currencies. 3, rising rates fail to curb inflation. 4, equity markets along with cryptos take a hammering and investors flock to gold as a safe haven. And perhaps this might be, just might be, the more likely option short term. And additional international conflict currently unseen or not prominent on the radar, our proverbial black swan, 6. Political unrest against governments, e.g. insurrections or inner turmoil, as we've seen recently in Canada, and who knows, perhaps even the United States during the election period coming up later this year, and or the demise of a prominent politician or electoral turmoil. Now, as mentioned, to some extent, a mild mixture of all of these may be more likely than any single one of them occurring with any sense of force or dominance. Now, the usual suspects are all over YouTube stating this is the year the US dollar collapses. We simply don't see it. Its rise these past couple of days prove that in times of conflict and turmoil, it is to the US dollar that investors flee. Our best prognosis or forecast is that gold will rise above 2,000 and hold, but it will be a grinding process over time that may indeed take a couple or a few years to occur. Yes, there will be spikes above that level, and also spikes to the downside. We are still confident gold medium to long term, and short term it has served us quite well. However, this week has shown, if not proven, the pumpers wrong. In the midst of runaway inflation, near zero interest rates, and a military invasion, gold still hasn't been able to hit $2,000. One must therefore ask, as we did at the start of this video, what is it going to take? Do share your thoughts, we'd be interested to hear them. Thank you so much for listening. Please, by all means, give us a thumbs up, subscribe, press the bell sign, and look out for our weekly update, which we will publish tomorrow. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.